Welcome everyone to All Things Urban, the official channel. I'm Benji, and today I'm going to be here with Carmen Basciano, owner and certified public accountant. He is the owner of All City Tax Service and the owner of Lincoln Tax Service, both located in New Jersey. All City Tax Service is downtown Newark. And Carmen, that looks like the office that you're in right now. Is that?
Yep, that's where I am right now.
Okay.
I'm standing in the middle of it.
Nice. So today we're going to be talking about all the changes to come for the 2023 tax season. Carmen is going to put us, deep to everything that's really going on behind the scenes that we might not be familiar with. So you definitely want to pay close attention and see what's up. All right. So, hey, Carmen, what's going on?
Okay. All right. So the topic today is 2023 income taxes. Right. They're different from last year.
Right. How so?
From last year. There's changes every year with the tax forms. And the way I look at those changes is that a lot of them are what I call typical.
Okay.
And some of them are kind of like what I call, wow, that's going to change the refund.
Okay.
So last year in 2020, because we were in the midst of the pandemic,
right,
the government changed the refund calculations. They changed them so that they were advantageous to most people. Okay. They increased the child tax credit. They increased the calculations. They had made the calculations more favorable.
Okay.
So that was kind of like a gift that I say from 2020 and 2021. And now this. So the refunds are different. They're down. Okay. I don't want to scare anybody.
Okay.
But they're basically, we've done about 100, maybe 200 returns so far, getting them started here in Newark. And what we're noticing is, unless there's been a change in dependents or a real big change in income, the refunds are generally very 2019-ish. They look like 2019. They just have like a little bit more money packed on them. But they look like 2019. They do not look like 2021. So those are there's some wow changes. The typical changes, Benji, are usually the changes that happen every year. There are changes to the tax rates. There are changes to the standard deduction.
Okay.
So there's different standard deductions. I don't want to spend too much time on that. We'll have other videos.
Right.
That'll be informative about, why you want to be head of household, why, what happens when your filing status is single.
Right.
So, but the wow changes are in three big categories. They are, and these are what I'll call the urban categories.
Okay.
Now, the three big credits that the people would usually get, people with kids, people without kids, but mostly people with lower income. There's three big credits. They are, one, the child tax credit.
Okay.
And then two, the earned income tax credit.
Okay.
And then three, the dependent care credit. Okay. I'll go through them each and talk about when there are changes to refunds this year, where those changes are coming from.
Got it.
Okay.
Perfect. That would be perfect.
Okay. So information is important. We all want to know what's going on.
Right. Respectfully. Right.
So with the big one, with the child tax credit, so there's basically two things I'm going to say that are going on here.
Okay.
One, the credits, the amount of the credit was more last year. It was $3,000 if your child was between 7 and 17. It was $3,600 if your child was anywhere between 0 and 6 years old.
Okay.
So those are numbers, and I just threw them out here.
Right.
But there's another change, and this year that credit is $2,000.
Okay.
It does not include the 17-year-olds. It stops at the kids that are 16. At year end.
Okay.
So, that's a minor change. That's not the end of the world change, but that's going to affect somebody.
Whose child?
Right. That's just like a 1 year thing.
Right.
But this is the thing. You have the last year, the numbers were more. You're saying, a lot of people are like, well, it was $3,000 last year. It's $2,000 this year.
Right.
That's only $1,000 difference.
Right.
No, absolutely not. So there's more to it.
Okay.
And what that other thing is the classification of the credit last year versus the classification of the credit this year. Okay. So there's these credits are categorized as either refundable,
okay,
or non-refundable. Okay. So refundable, that's the good one. That's the one you want.
Right.
That's the one that's getting added to your tax return.
Right. Put money in your pocket.
We're going to Disney World.
Right.
With
Respectfully.
That
one.
Right. Now the other one, the non-refundable is it's available to you, but it's only available if you have taxes to offset against it. So when you have lower income, it's kind of beat to have low income, right?
Right.
But the only good thing about having low income is there's no taxes to pay.
Right.
Okay.
Right.
So like I said, last year, if you had, and we just did a return the other day, where the young lady had 3 kids. They were between 10 and 16.
Okay.
And last year, she had received. Now, I'm only talking about one of the credits.
Right.
There's usually 3 credits that they're getting.
Right.
The child tax credit, the earned income tax credit, and the dependent care credit. Right. If they paid someone to watch their kids so they can work, look for work, or go to school. Right. Doesn't happen all the time. I'm going to talk a little bit about that one later. But with the child tax credit, if she had 3 kids,
mm-hmm.
and they were over 7, and they were under 18,
mm-hmm.
she would basically get $9,000 for those
mm-hmm.
kids as a child tax credit. So I said 9,000.
Right.
Now last year was unique because they were paying out a monthly distribution.
Right.
Starting in July.
Right.
Okay. They were paying out half of the credit during that 6-month time period.
Mm-hmm.
So the young lady last year received $4,500 altogether in monthly checks. She was one of the ones that was fortunate enough to be on schedule and get what she was entitled to.
Mm-hmm.
So she had gotten $4,500.
Mm-hmm.
Okay. Last 6 months of 2001, she got $4,500.
Mm-hmm.
Last 6 months of 2022, she got nothing. They didn't do the monthly checks this year.
Right.
Okay. So with last year, with the $3,000 per child credit, not only did she get the $4,500, but we were also able to put the other half, the $4,500, on her tax return.
Right.
So we put that with the other credits that she had,
mm-hmm.
the earned income tax credit, and if she was eligible, the dependent care credit. Okay.
Yeah.
So she got that. All right. Why? Because last year the whole thing was refundable, the
mm-hmm.
good one.
Mm-hmm.
Now this year it's not refundable.
Okay.
It's income based. Part of it's refundable, part of it is non-refundable. Okay. If you have high income, you're getting all of it. Why? You have high income or higher than normal income, you're paying taxes.
Right. Right.
So the non-refundable piece, you're getting the benefit of it. Okay. Right. And then you're getting the benefit of the refundable piece. Why? Because you have income. Okay. So, but in this young lady's case, because her income was relatively low,
mm-hmm.
okay, the calculation of the refundable piece
mm-hmm.
was like less than half of what she had gotten last year. It was like, I think, $1,800 or $1,900.
Okay.
And so and I'm not talking about per kid. I'm talking about all together.
Right.
Okay.
Right.
So you said, oh, Carmen, you said it was going to be $2,000 I've got 3 kids. It should be 6,000.
Right.
I see the 1,800 on my tax return. Where's the rest?
Right.
You're not getting it. Hate to say it, you're not getting it. Who gets it is the people with the higher income. So my point is not to rub salt in a wound or anything like that, but the methodology is different this year. I hope there is a lot of talk of changing it. I think in talking before, Benji, I had mentioned that the gentleman, the senator from Ohio, came up with these changes 2 years ago.
Right.
And he's leading the fight today as we speak to reinstate those items.
And what's his name?
He does. His name is Sherrod Johnson. Senator, U.S. Senator from Ohio.
Okay. Is he African American?
It sounds like he's African American, but he is not. He's whiter than me. He's whiter than me.
But
he's got less pigment in his skin than me.
But he stands for the community, respectfully, the urban community.
Oh, he's doing the urban community a solid. Okay, because there's other things. I'm going to talk about the earned income tax credit and some of the innovative things that he came up with 2 years ago.
Okay.
Really smart stuff. Really benefited the urban community. But guess what? It's done. It's not that party's over. He's going to, hopefully he'll come up with some other good stuff. But he was pretty innovative when it came to being fair to lower income people during the pandemic. I was pretty impressed with him. Almost couldn't believe it.
Nice.
So, okay. So let's get back to this example.
Right.
So, so she basically, she didn't get $4,500 added to her tax return. She only got $1,800.
Okay.
So that's kind of beat, but that's like one of the changes.
Okay.
So, right there, it's like 2,000 and change difference between last year and this year.
Right, okay. But I would think that a lot of people would understand the difference. We do understand, the IRS was so courteous last year due to the pandemic. Everybody know that those checks that they were getting was just, a little, like you said, a gift from the IRS, and that wasn't permanent. So I don't think that the community should be,
But, Vivian, unfortunately, when you take money away from people, there's a lot of questions.
Money that wasn't even theirs, though.
Yep, absolutely. But okay. So that is that's the child tax credit. So like I say, that's one of 3. So the other big one is, and there's changes here, not always, but there's changes. Okay. So and it's with the earned income tax credit.
Right.
Okay. So the earned income tax credit is generally a credit, a refundable credit. No need to worry about the non-refundable part.
Right.
It's all good. It's all additive. Yep. It's all additive to your refund.
Okay.
And that is usually a function of 2 things. One, your dependents. Okay. And it does include people that don't have dependents.
Okay.
There's nothing exciting about the numbers, but they do include people without dependents.
Right.
So anywhere, and then the credits generally stop at 3 kids.
Right.
If you have 4 kids, there isn't anything additive to your refund.
Got it.
Okay. There would have been if you had child tax credit and your income was high. But in this case, in this second category, earned income tax credit, it's really just 2 things. It's your income.
Okay.
And it's your number of kids.
Okay.
And it's kind of like a funny thing. What we have here is, up to $7,000, almost $7,000.
Okay.
Being given to people with 3 kids, and that if they have like the right income, I think the number is somewhere between, it's less than 50-something thousand. It's on the chart.
Okay.
But there's kind of like a curve to it. The higher credit is people with lower income get favored with the higher credit.
Okay.
And then the credit starts going away as you make more money. Okay?
Got it. Okay.
So
So the chart here that you sent me, it says for 3 dependents, filing a single head of household or widowed, it'll be $53,057 as the max.
right, that's the maximum income. And then
Right.
later in the chart, it says for the 3 kids, what's the maximum credit? The credit is what's popping on the bottom of the tax return.
Yeah. So the maximum credit is $6,000 for 3 or more dependents. It's $6,935.
Right. So
this is a good chart, Vach.
Yeah, it's a nice chart. It's but you know, there's a lot of twists and turns to the chart. If your income is 53,000, you're not getting that much of that 6,900.
Right. Okay.
If your income is 54,000, Benji, guess what? You're not getting any of that credit.
Yeah, it's over. Respectfully,
you're gone. It's all over. So
it's
like, so it's usually somewhere down, like, I don't even know what it is now, but it's like maybe 20,000, 18,000, something like that. That's where the 6,900 rather comes together. So with this, it's a great program. It's been around since the 70s. I think it's a Ted Kennedy thing.
Okay.
And it works out great, but with the pandemic, 2019, everything was kind of good.
Right.
2020, everybody was in 2021. Everybody was kind of like sitting home with the mask.
Right. Scared.
The kids couldn't go to school. So guess what? You couldn't work. Okay. So what did I say? This credit is called? It's called earned income. If you were sitting around getting unemployment, guess what? You're not getting this second credit. So the senator from Ohio came up with this innovative thing where he said, and everybody bought into it, and it went live. You can look back to your 2019 income to calculate the credit.
Okay.
So you can look back to 2019 when you were working to calculate this credit.
Got it.
That sounds really good because you really didn't work.
Right.
Guess what? It even got better than that. Because if you worked, so let's say you worked at Costco and you made in 2019 and you made $20,000. Okay, you would have probably paid about $3,000. Not you, but between you and your employer, you would have paid about $3,000 in Social Security tax. Okay, our Social Security tax is 15%.
Okay.
And if you're a W-2 employee, the way it works is you, the employer, paying half, and then your employer is paying the other half.
When it's
tax time and you're a W-2 employee, all that money's been paid, so you're getting the full credit.
Got it.
When you're a gig worker, it's a little different. Chances are you were not making estimated Social Security tax payments. So when you went and filed your taxes, you're happy that you had gotten the earned income tax credit.
Okay.
Well, you got to pay back. You got to pay a little bit of that Social Security tax.
Okay.
Okay. So the nice thing about this look back provision is you were able to look back to your income to get your credit, but you didn't have to pay the tax because you didn't work.
Okay. So
it was nice.
Okay. I'm sorry, Carmen. Just for clarity. So a gig worker would be anybody receiving a 1099. So like Uber drivers, DoorDash, Instacart, that sort of thing, right? Just so we're clear.
Absolutely.
Okay.
That's, with babysitter,
right.
You may not have even gotten a 1099. You may have been a babysitter paid cash.
Got it.
Or you may have been a hairdresser paid cash.
Got it. Okay.
Okay. So that is the big benefit is that you can look back. Okay. Now it's different this year. If you didn't work, you're not getting this credit's gone because you're not participating in the earned part of this income.
So don't look back.
There's no look back.
Right.
No look back. You better have gotten you better have been to work. Okay.
Right. Okay.
So, and then the other thing I'll talk about with the child tax, with the earned income tax credit is that there is if you put up the chart, they'll see it. They used to give a little bit of change to people that did not have kids.
Okay.
Okay. It was a funky thing. Like you had to be a certain age. You had to be 25 or older.
Okay.
You have to have made a certain dollar amount. I'm going
Mm-hmm.
to say like 12, 15,000.
Okay.
And when you did that last year, okay, or no, when you did that in 2019, they
Mm-hmm.
would give you like maybe $500, which ain't
Right.
it ain't the same ride as when you have kids.
Right.
Okay, but it's something.
I was about to say it beats a blank.
What's that?
It beats a blank.
It beats a blank. You're damn right. It beats a blank. Now, it was really nice last year, because there's a lot of people walking around that are under 25 making low money.
Right.
And what they did last year is they increased the scope of people. They didn't say you had to be 25 years old. You could be 18 or 19 years old. Okay. And they gave you not 500, they gave you 1,500. So that's some, that's a nice change.
Yeah, nice.
So, but if you came to me last year, you were 19 years old, you worked at the airport, you made, $15,000, you got a nice refund.
Mm-hmm.
When you show up this year, you may not even be eligible for that credit because you don't meet the age requirement.
Okay.
So that's kind of like, I wish they brought that back, but that's not in the cards right now.
Okay.
So, and then when I talk about the big three credits, I spoke about the child tax credit. I spoke about the earned income tax credit. The other one that's often overlooked is the dependent care credit.
Mm-hmm.
This is a refundable credit,
mm-hmm.
right? A refundable credit that you're eligible for if you had a child at a certain age, and I think it's generally at like 11. The highest is 11.
Okay.
And you paid somebody to watch that child so you can work, look for work, or go to school. So with that, you generally have to have higher income, but it's still relevant to urban communities. It's still highly relevant to urban communities. But the credit, like when things were really good last year, the credit was like people were getting like $4,000.
Really?
If they're lucky, maybe they'll get $2,000 this year.
Okay.
But it's a funky credit, Benji. It's to get it, you have to have the I'm saying this like tongue in cheek. You have to have the government name of the person you paid, their social security number, and their address. So a lot of times, like your neighbor's helping you with your kid. You know where she lives. You know her name as Cheryl, but you don't know that her real name is, her government name is something else.
Sharita.
And then when you want to pay her and get part of that money back on your taxes, you'd have to ask her for her social security number. And what's going to happen? What do you think is going to happen when you ask her for her social security?
I was just about to say, who is going to be giving anybody their
Ain't nobody.
social security number?
No, you can be a little smart and if you were a good planner, you can get her to come up with an EIN number.
That's what I would say. I would probably say, like, go to my tax preparation office and fill out the paperwork so that I can be compensated. But ain't nobody gonna just be like, here you go.
Here you go. Yeah. No, the easiest way I found over the years is if she's just got a few minutes and she can pay attention, she can go to actually the IRS website and get an EIN number. And and then give you that. And that's certainly not, you're not screwing up her, nobody's doing some slick stuff with her social security benefits with an EIN number. So that's what I generally, but you got to plan, you got to do it ahead of time. You got to, so that's the other option. But generally it doesn't really, a lot of people just, won't do it. I mean, it's a little bit more relevant because what I generally hear is that like program for parents is, not taking not dishing out the benefits they have in the past. That's going to be a segment that we do down the road. Okay. That's definitely
because I didn't even know programs for parents was still doing that.
They are, but they're not as I want to use the word generous, but they're not. People aren't getting it the
Okay.
way they used to.
Yeah, I was about to say in the past they were a lot lenient. Anybody could apply and be, receive benefits
right.
now.
Yeah.
Okay.
And I don't know. Maybe it's a supply thing. There's not a lot of people that want to care for kids in this environment. I don't know what it is.
Yeah,
But
things change.
we're gonna go through that, Benji, and that's going to be one of our segments.
Okay.
That one.
I can't wait to talk about that.
Yeah, I can't wait to talk about that.
Yeah.
So those are the big three things. That's why the refunds are down. So when I say they're down, they're just basically like 2019. I don't want to scare anybody. I don't want, I got text. Oh, should I still, I heard refunds are down. Should I still bother filing?
Absolutely.
Absolutely.
You have to, right?
So, okay. If not for any other reason, like I said, this refundable monthly child tax credit that we went through in 2021 raised a historic number of kids out of poverty. It's it's historic. So it's almost like, I don't know how true this is, but I had heard one congressman say, we haven't raised as many kids out of poverty since Lyndon Johnson. And he, that's the guy after Kennedy that started the New Deal.
Right.
So, that's basically started welfare.
Okay.
So, how true it is, these guys are funny what they say.
Right.
But it did a lot. And this guy, Sherrod Johnson, he's out there to push it for 2024. Hopefully we get it.
Okay.
And what you want to do is make sure you claim your kids.
Okay. Okay.
Why? Because if they start cutting checks in 2023 or 2024, they're going to look, kind of tongue in cheek. They're going to look back at your tax return.
Right. Right.
And they want to see what kids you claim. They want to see what their ages are. They want to know what your address is. They want to, they know your banking information. Bam. And it's, I always tell everybody, use direct deposit. I would prefer that you use a bank, an actual bank, because these, sometimes the IRS acts a little funny with the temporary cards that are issued by offices like my office. The tax industry has a card that you could put it on.
Okay.
The IRS does not like to put subsequent payments on that card.
Okay.
What they love is if you had, and I don't have a preference, and for some reason, Bank of America comes to my head, and I would prefer not to use them. But anyway, like banks like Bank of America, Wells Fargo, Santander, all those banks, that's who they prefer to send the money to.
TD too?
TD, yeah, TD. All like the brick and mortar places.
Got it. So not Chime, not
Chime for some reason does work.
Okay.
And I know I said Cash App. So Cash App sometimes works, sometimes it doesn't work. But the cards that we use are not always the best. I mean, not always the best. And a lot of people don't want to use the brick and mortar banks because, there's an overdraft or, there's a fee, there's this and that. There's, do the research. I like Chime. So, but you want to use a regular bank on this year's tax returns. So if we're lucky and these advanced child tax credits pop up again, you'll be sure to get it on your card. You're not going to have to chase the mailman.
Got it.
So, okay. So those are the big things. Benji, the other big thing, I mean, there's all these little things like, there's no deduction for charitable contributions. It was like $300, $600. That stuff is kind of noise.
Okay.
The other big thing is, this is it. Get ready for this one. Okay. This is where you want to have
I'm tapped in.
Help your stuff. You ready? Here we go. 1099-Ks. IRS reporting. Big change this year. big change this year.
I was going to ask you that.
Yeah. Before this year, if you had a third-party payment provider, and you had received more than $20,000, more than 100 transactions, you'd get a 1099K.
Okay.
Now that's a lot of money. That's a lot of activity. Okay. They switched it from that to, if you have an aggregate of $600, you can get a 1099K.
I knew it. That's exactly what I was going to ask you. I promise you. That
one's going to be, it'd be interesting to see how this thing works. But so if you had somebody Cash App you $302 twice, you're getting the 1099K. And that 1099K has to show up on your tax return. It has, if it's a business transaction, and it's not on your tax return, you better watch it. So you know what the IRS is all about. The IRS loves to match things. Okay, they want to match the W-2 that your employer sent them to what you put on your tax return. If there's a difference, if your tax preparer mucked up, or you put an extra zero in box 2, the federal withholding, your stuff is going to get delayed. Okay, and they may require that you amend the return. Okay.
Ooh.
And then, and then that's not the, that's not the real bad part. The real bad part is if you have to, like right now on an amended return, I can't send it in electronically.
Right. Isn't there a time you have to wait until a certain amount of time to even file amendments, right?
And the IRS, I feel comfortable saying this, has gone backwards since the Obama era when it comes to handling mail. They have literally gone backwards. They're doing stuff by hand now that they used to do. They'd have facilities the size of a football field with just 2 people working in there. Everything was automated, and I don't know what the hell happened, but they say that everything's like it's being done by hand now. So you don't want to have to amend a return. And then the other thing is you're only allowed to amend a return once. So what if something else goes on? I don't even know how to handle that. You have to go somewhere else for that.
Yeah, so that's why, just go downtown to All City Tax Service, where they make sure your taxes are complete, accurate, efficient, and you don't have any issues. You do it right the first time, you don't got to keep,
Right. You don't have to, and you do it right the first time. You don't have to worry about an envelope coming in from the, in the mail from the IRS. But this thing with the 1099Ks, I think it's going to be a big thing, because they're going to match. And if things don't match, there's going to be a consequence to it. There's either going to be a letter. If it's a small change, the IRS is great at metrics, at measuring. Okay. If if you have a history of problems, if you have a history of not filing all your W-2s, because in the hood, sometimes they say, oh, I'm not filing that W-2. I'm going to put it on next year's return.
It was only $300.
Yeah. Okay.
We heard that a lot. Yeah.
But they're like, oh, I'm not putting that one down, Carmen. I'm going to use that one next year. The hell you are using it.
Yeah, we're going to use it.
We file returns by year, and that W-2 will, that chart that we were talking about, the EITC chart, that chart's funny. Little amounts of money change that credit. IRS wants to make sure you get the right amount of credit. So, and then if you didn't come to me in 2021 and you bring me that W-2 in 2022, I don't know what to do with it.
Right.
You amend your 2022 tax return. You have to find your tax return. You're paying twice to do that. So it's this thing with the 1099s where you have to take it very seriously, because they will match it. And if there is a difference, there's going to be a consequence. Okay. And then this is the other thing, that's I'm always fearful of with 1099s and Cash App. And this is a situation that, that I go through. I may pay someone with Cash App, Okay. So they're going to get from Cash App a 1099. Now, guess what? I don't care that they got the 1099 from Cash App. I still have to send them a 1099. So the money that I paid them, and I'm just using me as an example.
Right.
The money that I pay them is going to show up twice. So you better be smart enough to realize that there is a duplicate payment and that you got to make an adjustment. Otherwise, you're going to, on your Schedule C, you're going to have money that shows up twice. I just went through this with a guy that he's a DJ, and he works for one guy that will either pay him Cash App, might pay him with a check, might pay him cash, might do something else. So, but at the end of the day, when he sent a 1099, it's going to be for all the money. But he's also going to get something from Cash App that said $300. So he's going to add that to the $6,000 the guy reported to him, overstating his income.
Right.
You got to be, it's a little. I don't think we're, I know this sounds weird, but I don't think we're ready for this. But we, hopefully the tax preparers they're getting ready for this. I certainly am.
You're ready. You sound.
No, I'm ready.
I'm
ready to roll. We got, here we are, like middle of, kind of like the middle of December. This is where we're, we start our stretching exercises, and we get ready because the IRS.
Yeah, I see. And then you just gave us so much information. Like I didn't even. It was so crazy because so many people was asking me about the Cash App thing, and will they be responsible to file and all of this, and so I wanted to ask you that, but the crazy part about it is you took all the words out of my mouth, even when I was going to ask you, so it was just mind-boggling. You gave us so much information, so thank you for that.
Benji, sure. I've been doing this a long time, Benji.
I know.
So all right, so thank you very much.
You're welcome.
And we'll be doing another video.
We'll be doing a lot of videos.
Right. Absolutely.
We will be doing a lot of videos, right? So you want to make sure you subscribe, you send this to your cousins, your cousin baby mothers, send it to all of them so that they can know what's going on and what to expect for this tax season. Because, we don't want people thinking one thing. So look, just have them subscribe where we're going to be giving you up-to-date information with any changes to, tax season. All right?
Right. And the next one we're going to do is the Anchor program for state of New Jersey. Okay. Show them how to fill out the application. There's a deadline on this.
Okay.
And the money doesn't come right away. It's not going to come until I think they're publishing
in May
23rd or something like that.
Okay.
But there's a deadline. They just moved the deadline. Originally it was December 31st. Now it's January 31st, and it's a nice little thing for tenants.
Okay.
I think the income cap is $150,000, so it should cover a lot of people in the urban community.
Okay.
So the tenants are at $450, which is nice, and the homeowners under $150,000, I think it's $1,500.
Okay.
So, but we're gonna put together this video showing people how to do it.
Okay.
Okay.
Yeah. All right. Thank you. But all right. Again, listen, I'm here for it. Listen, they gonna be here for it. They want their money. If anything, people in the community want their money. So look, I'm ready.
Right. And that Anchor thing's the last of the COVID benefits.
That's why I have a lot of people. That's why I have a lot of people in the tax office. Make sure y'all go to All City. Make sure y'all check it out downtown because I don't know a lot of other people talking about this. You're the first person I heard talk about this.
Oh, because you can't get paid doing it.
Oh, but
you can't get.
Look at that.
I know, but we got. It's. But anyway, okay. Yeah. So click and subscribe. Right.